In New York, in for Emily Chang, and this is Bloomberg Technology. Coming up in the next hour, shares of Disney rise to its highest levels ever. That's after revealing its highly anticipated streaming service. From The Simpsons to Star Wars, can Disney Plus deliver on all that it's promising to the fickle consumer? Plus, Uber's IPO filing contained hundreds of pages of detailed information about the company, which may be valued at about $100 billion. We delve into all the questions as the startup inches closer to the public markets. And among the wave of public offerings is one of Africa's biggest e-commerce firms, Jumia. We'll hear from the co-founders as the stock surges in its debut. But first to our top story. Disney surged to an all-time high on Friday after the entertainment giant gave investors a sneak peek of its highly anticipated Disney Plus streaming platform. Now, the service, which will include hundreds of hours of original movies and TV shows from brands like Marvel and Pixar, well, it's set to launch November 12th at a rather competitive price, $6.99 only a month. Joining us to discuss is Bloomberg's Anusha Sakui in Los Angeles. And that is why we saw Netflix shares down, $8 billion market cap eroded, because $7 is pretty good price point compared to like their $11 package.
That's exactly right. You know, I have to say, you know, Netflix is a volatile stock, and you know, next week we do have their earnings, so they'll swing about. And you know, some good think pieces out there by my colleague Tara LaChapelle as well. We have an interview as well with Emily Chang last night with Bob Iger that I think was worth watching in full to get some interesting details in their proposal for this platform, because really they have a huge breadth of content. I mean, it really does rival Netflix in terms of how many hours you could spend on it, and that's not including when you look at ESPN Plus or Hulu. But it's going to be very family focused, and that's very different to what Netflix is.
Yeah, first of all, talk to me about dispelling the myth that this is all just children focused, though, because when I first looked at it, I was like, well, great, my son's going to be entertained in his future years, and I love a Disney movie, but is there much there in terms of adult content and documentaries and the like?
They have hours of National Geographic. I mean, myself, I have been watching, Our Planet on Netflix. We watch a lot of that in my family. So there'll definitely be that kind of content. There's Marvel that, appeals to all age ranges. There's this whole Star Wars, Lucasfilm world. And, just note that the creators of the Game of Thrones, which is going to have its finale, they're actually moving over to Lucasfilm to create the next world of Star Wars in a few years, though. We don't know when that's going to be. There's going to be some old Fox content, potentially. I saw a little tile of Avatar, but, we don't know about some of the edgier Fox content. That's clearly not going to be there. So you're right. There's a question mark there.
There's also a question mark, obviously, about the fact that this is going to be loss-making for 5 years. But more to the point, what do they do with Hulu? There's a lot of competing offerings right now. They own a lot of them. Disney owns, as you mentioned, ESPN, Hulu, but they've also got Netflix. There's going to be, CBS is looking at bringing out. It feels as though, does it have to be more about the technology behind it, the AI that powers us when we're watching Amazon, Netflix, to see the right thing at the right time? Or is it just going to be content that's king?
There's a few aspects. So, I think there's going to be a sort of a super majors of content. We already see them forming now in Hollywood. You have AT&T, Disney, and Comcast, and then there's everybody else. You've really got to look now at what's going to happen to Lionsgate, Paramount, its owner Viacom and CBS, and then you've got the new players, Apple. Apple at its show didn't show really any content. It's got a few TV shows. So question, what do they have? But they probably will have the technology. And then you're going to have issues about live. YouTube has a popular platform, but they showed some new pricing this week, $50 for their live TV platform. So it's going to be a question of what can you get at a good price and what's going to be fun to use. Now, Disney has a potential killer advantage because Bob Iger said yesterday that they're going to offer potentially Disney Plus, ESPN Plus, and Hulu as a package that will be discounted. In that, you'll get with Hulu not only some edgy shows like Handmaid's Tale, but also not live necessarily, but you could have delayed shows like Modern Family or other TV series.
Fascinating perspective. There's so much content. I don't know how we're all going to fit it in. Anusha Sakui, we thank you for joining us. Meanwhile, our own Emily Chang, as Anusha was saying, sat down with Disney chairman and CEO Bob Iger in LA right after Thursday's announcements. Take a listen to her interview.
I think making them available on a new technology platform, that is simply more modern and I think growing in popularity at a price that makes sense with a user interface that's beautiful. I think that's why we feel confident that this is a product that people are going to sign up in droves to have.
Now, you said you will likely bundle Disney+, ESPN+, and Hulu. When and what will drive that decision?
Well, I think you can figure that we will bundle ESPN Plus and Disney Plus fairly soon. I don't have an exact date. We're launching Disney Plus in November. Hulu, we still have a minority partners, and everything that we do with Hulu has to be done, with them in mind. So bundling, would be something that we might take to the Hulu management and the board, but it would require the approval. But we think that there will be consumers that will want all three, and eventually we want to make it possible for a consumer to buy all three. Will you be attempting to buy all of Hulu? We'll see. We've been in conversations with both partners about that possibility, but it's still a little early to speculate. Now, you did give up some partnerships with Netflix as a result of, pursuing the streaming service. You mentioned some of your distribution deals. You talked about Roku. You talked about Sony. You didn't mention Apple. You didn't mention Amazon. Why not? Well, the app will, in all likelihood, be available through traditional app distributors, Apple being one of them. So I'm fairly certain that if people want to buy the app, sorry, subscribe to the app, is maybe the better way to put it, that they'll be able to do so through Apple and the iTunes Store and other platforms. It could be the traditional cable distributors who also sell apps or sell, subscription apps will do that as well. But we didn't have any announcements because we haven't made deals with all of them yet. Now, you're on the Apple board. Now that Apple does have a direct competitor to this service, will you stay on the Apple board? Does that make sense? Well, obviously, I'm mindful of my fiduciary responsibility to Apple shareholders as a member of the board. And when the subject is discussed at Apple board meetings, I am careful to recuse myself, and I'm in constant dialogue about making sure that I'm not doing anything that in any way would essentially cause me to be, not in keeping. It wouldn't be in keeping with what an Apple board member would do. But it's that business is still nascent to Apple and still relatively small, and so it's not really discussed all that much. And so far, it's been okay, and I'm in constant discussion about it. All right. So you noted a lot of losses. You said Disney Plus and Hulu won't break even until 2024. Should we assume then that you'll be flat to down for the next few years, or will you make that up somewhere else? Well, don't forget, we're still growing the company, and there are other businesses, fortunately. Our theme park business has delivered great growth over the last number of years. We didn't give guidance on those businesses, and our media networks have been very healthy, and of course the studio has delivered great growth. We're also absorbing 21st Century Fox and its businesses, and that will start factoring into our numbers going forward. So we're not giving projections about the whole company, but we're obviously confident that we'll continue to deliver value to shareholders, both in the near term and long term. You've completed the acquisition of the Fox assets. There have been some layoffs, but it hasn't been as dramatic as some thought it might be. Will there be more? Well, look, we still have a lot of integration to go, and I think people know that. And with the integration will come consolidation. We've already said that. We've been transparent about that. We haven't talked about specific numbers, and we haven't talked about timing, but there will definitely be more consolidation going forward. We've really just started. Now, you are making a huge transition here with these developments. Where do you see Disney in 5 to 10 years? I mean, do you see Disney as more of a technology company? Well, technology, we've always seen Disney as a technology company. Actually, going all the way back to Walt's day, technology was incredibly important, really to do two things. One, to use it to make our product better, his multiplane camera and what it did to backgrounds in 2D animated films, for instance, but also to improve the experience of the consumer. I think in 5 years, you'll see Disney as basically at its core being a content company, a storytelling company that is using technology more and more to do all of the above. Make the product better, make the experience better for consumers, make it more accessible on more relevant, more modern platforms. In other words, distribute it in more modern ways.
That was Walt Disney Chairman and CEO Bob Iger. Now coming up, leaving the window wide open for the biggest IPO of the year, Uber finally files to go public. We break down what the ride-hailing company will look like in the public market next. And if you like Bloomberg News, go on, check us out on the radio. You can listen on the Bloomberg app, Bloomberg.com, and in the US on SiriusXM. This is Bloomberg. So Uber has taken one step closer to hitting the public market. On Thursday, the ride-hailing company revealed, of course, that it racked up some $3 billion of operating losses last year and is rather hoping that potential investors will look beyond that. Uber wants instead investors to view them as a platform, a word that appears no less than 700 times in its IPO prospectus. Joining us now from Miami is Mike Walsh, general partner of Structure Capital. Mike is an early investor in Uber. Also with us in New York is Bloomberg Technology's Eric Newcomer. Eric, it's your story that really highlighted that this company wants to be seen as a platform. It's not just ride-sharing like Lyft. There is so much more to this company.
Yeah, I mean, Uber Eats is sort of the key example, I think, of the next phase. It grew to $1.5 billion in revenue last year. So Uber's story here is, okay, we had ride sharing, that's still growing, but it's down to like 33%, much smaller than it used to be. Now we have Uber Eats, that's our big growth driver. Someday we'll have freight, we have scooters, we have bikes, and we'll figure out some other things. And that's really the story that they want us to focus on. And like you said, it's a good way to try to sort of ignore a $3 billion operating loss. And so it's sort of buy this story or worry about the bottom line. And that's going to be the argument we're going to have with Uber.
I mean, Mike, as one of Uber's first investors, we've got to congratulate you, but also ask you, did you ever see this vision of such an omnipresent company in so many different areas? Did you see it as a platform?
Definitely not. When I first invested, I made a commitment in 2009 as an angel investor. And quite frankly, had I seen it coming at this value, I would have probably mortgaged my house and made a much larger investment. But today, as I think about it and I listen to Eric and I read what Dara has had to say, I do think there is the platform potential. I was an angel investor in Salesforce.com in 1999, and I was one of the first customers. And then with the software company that I was running, I was also one of the first App Exchange partners. So with what they're building, it is clear to me that there is the potential to be a platform and take a piece of the action for everything that goes through the platform.
Eric, though, as you say, we've got to focus on the growth and ignore the lack of profitability. And at no point did the company ever hint that they might be hitting a profit anytime soon. And in fact, there's yet more concerns about how the business model might be disrupted by what happens in terms of regulation on drivers. I mean, what are the key concerns you're hearing from the investor base right now?
So I think one interesting metric that Uber provides proactively is this adjusted net revenue figure, which takes out some of the driver incentives and driver referral bonuses and sort of further diminishes their financials. And it's an interesting way to sort of see, if you look at that number, for instance, in the fourth quarter of 2018, ride sharing was actually down in an adjusted net revenue basis, only by $1 million. But it's troubling when you're looking at Uber and you want it to keep growing and you see it go backwards even slightly. I think that's going to trouble people. And the reason for that is competition. Uber is seeing a lot of pressure on its take rate because Didi figured out that Latin America is a good business, so it's facing more competition there. Lyft has been reinvigorated, so it's competing with Uber in the United States. So there's just competition all over the world. And so Uber's take rate, both on Eats and in ride sharing, it faces pressure. And that really hurts the margins on a low margin business. And that's part of the reason they lose so much money.
Mike, paint the picture for a would-be, wannabe investor in the public markets in Uber now. Like, how much should they be worrying about the fact that it's loss-making and it's got to spend so much in terms of marketing to keep up with the competitors?
Sure. I mean, I think there's a lot of upside in the cost that they're charging for rides, the entire market, Lyft and the other competition, there's still so much of a pricing gap between the ride-sharing companies and the taxis that they've all had to drop their prices to compete with each other. But I think that over time, there's that ability to increase prices. And I do think that there's a ton of profitability in Uber Freight and potentially Uber Eats. We're in a couple of companies, Cargomatic, for example, that is all about freight. And we've been investors in it for about 6 years. And that's just a giant market. And I think there's a lot of opportunity to make profit there.
Eric, when we're looking at, therefore, when we're looking at this company going on the roadshow, what will be the main areas that they try to have to be tackling, do you think, in terms of areas that people are going to be question marking in terms of their overall growth?
Well, I think, especially given that Lyft just went public and people are going to be comparing
share
Uber
price
and
drop.
Lyft. Right, exactly. Understanding market share, or as Uber calls it, sort of category position, is going to be key. I mean, I think one of the funny sort of for a financial perspective, is that, Uber talks about having less than 1% market share because they really want to emphasize that point that there's so much room to grow, they can eat into so much of transportation, but then of course they need to also say, but we're very far along. So they have more than 65% category position as they define it. So in the United States and Canada, they claim, okay, we have more than 65% of the ride-sharing market. And they claim that in Europe and Latin America and in much of the world. And in the places they don't, they own a stake in the competitor who has sort of a strong position. So I think that's really going to be part of the global sales pitch.
And Mike, I mean, obviously there's going to be lockup periods and the like, but will you exit Uber entirely? Or are you in this for the much longer haul as a public company?
Well, we're really not public company investors. We invest in the very early stages. I've got some personal stock that I'll hold on to for, I don't know, a long time. And when it comes to the stock that's in structured capital, I'll distribute that to my LPs, and they can decide what to do with it as the lockup period ends.
Mike Walsh, great to get your perspective as a very early investor in Uber. Structured Capital, of course, is the name of the company and the entity with which he invests in other companies as well. And Bloomberg Technology's Eric Newcomer, after an exhausting week, we wish you a great weekend.
Thank you.
Coming up, Tesla is making it more difficult to buy the cheaper version of its Model 3. How investors are reacting to yet another change in Tesla's lineup and retail strategy. That's next. This is Bloomberg. Talks between General Motors and the electric vehicle startup Rivian may have come to an end. GM has been considering taking a stake in Rivian in an effort to bring fully electric trucks and SUVs to the market faster. But Bloomberg reports that discussions have collapsed in the last 2 weeks. GM would have joined in as an investor alongside e-commerce giant Amazon, which led a $700 million investment in the startup back in February. Now, sticking with autos, because just over a month ago, Tesla introduced at last, of course, its cheaper version of the Model 3. Now, it's abruptly taking the $35,000 model offline. In a blog post Thursday, the electric car maker announced that it will no longer take orders for the entry-level model. Instead, customers who want this version will have to call or visit a store instead. This just weeks after the company announced its shift away from physical stores. Here to make sense of it all, as always, we're very pleased to welcome is Dana Hull in San Francisco. Dana, I mean, we saw already Elon Musk trying to say that they're fully transparent on their pricing, but this seems very confusing.
Yeah, I mean, I think the goal is to streamline the online ordering for customers. And Tesla says that most customers want the standard range plus, which is a little bit more expensive, and that not that many people are actually ordering the standard range Model 3. But for a company that's whole premise was that they were going to bring a $35,000 car to a mass audience, the fact that you can no longer order that car online is suspicious. And maybe it's not suspicious. Maybe they're not making money on that car, and maybe not that many customers want it. But the fact that it's not available online is just weird. You have to like physically go to the store or call if you want it.
Yeah, I mean, the Model 3 with Standard Plus, where you do get perhaps the autopilot, will be $39,500. This after we saw the distribution numbers come out that weren't looking as strong as possible. This is a company that needs to basically make profit from these cheaper vehicles.
Yeah, and the margin is on software. The margin is on autopilot, and you know, so basically what they've done now is they've made autopilot a standard feature for all cars, but not the $35,000 one. And they've kind of rolled autopilot in as a standard feature as opposed to sort of an add-on. So that's where the margin is. And yeah, I mean, it's very early in the second quarter, and you're seeing yet another kind of shift to the lineup. They've also introduced a lease, which is great news if you want to lease the car, but there's a caveat, which is that at the end of the 3 years, you can't actually buy the car because it will kind of go into what Musk is calling this Tesla autonomous fleet. So, I mean, there was a lot of news in this blog post that was released last night at 11 o'clock Eastern, and it's just more confusing. Now they seem to be sort of promoting the idea that they have this network of physical stores after saying that they were going to close a lot of them.
Yeah, and Elon Musk has been trying to put the record straight, going onto Twitter saying, look, other automakers change their prices constantly and substantially by varying rebates and discounts according to negotiating structure by buyer. We're transparent, we're consistent. I also thought it was interesting that he took to Twitter to try and talk up the competitive nature of Tesla versus Lyft and Uber as well, trying to remind people, as you were just saying, about the autonomous nature of this vehicle and how we're all going to be sharing them basically in the future.
Oh yeah, that's going to be the big talking point of the next week or so. I mean, remember Lyft just went public, Uber just filed its S1, Tesla's having an autonomy day for investors on April 22nd, and then it reports earnings on April 24th. So after being somewhat quiet about its autopilot roadmap, we're hearing a lot about that right now.
And meanwhile, just remind us, there's been a bit of backlash coming from David Einhorn. Of course, we're not going to be surprised by that, but Greenlight, the short investor in Tesla, crowing by the fact that he's made some money on his short position. But he thinks the wheels have come off of Tesla. Do you think there's any vindication to that claim that he's just made?
I mean, I guess I take a long view of the short thesis. I mean, you can have a great, your fund can do well one quarter and not the next, and he's been somewhat, down overall. But I mean, the fact that Tesla had such poor first quarter deliveries and seems to be sort of fiddling with its lineup and pricing so early in the second quarter begs the whole demand question.
Certainly does. Dana Hull, we thank you for putting it all into perspective. As ever, great reporting across Tesla. Now, coming up, the US Federal Communication Commission will auction the broadest set yet of airwaves. Yet in December, of course, we're going to be talking about the adoption of 5G and hearing from none other than the chairman, Ajit Pai, about how the US will move forward with its ambitious plan. And later, it's known as Amazon of Africa. We'll talk to the co-founders of Jumia, which launched its IPO in the US just this week. This is Bloomberg. This is Bloomberg Technology. I'm Caroline Hyde in New York. Now, in the race to 5G, the US Federal Communications Commission is going to be auctioning the most spectrum yet to facilitate the move to the broadest set of airwaves. President Trump spoke about this topic earlier from the White House and was optimistic about the US and how it could dominate global competition.
We cannot allow any other country to outcompete the United States in this powerful industry of the future.
Meanwhile, FCC Chair, that's Ajit Pai, spoke with Bloomberg's Kevin Cirilli on the 5G Fast Plan. Take a listen.
5G Fast Plan is the plan to facilitate America's superiority in 5G technologies. A core part of that plan involves making more spectrum available for the commercial marketplace. Well, later this year, we are going to be holding the biggest auction of spectrum in American history, 3,400 megahertz of millimeter wave spectrum, which will really put a stamp on American leadership on 5G across the world.
So put that into context, 3,400 megahertz. What does that actually mean, especially when you look at our global competitors like Korea, China? Put that in perspective for us.
We're very much ahead of the curve. In combination with the two spectrum auctions we've currently held on 5G right now and about a few months ago, we will be allocating more spectrum for commercial 5G than all the mobile broadband providers in America have today combined. So this is a huge influx of supply, and we are very confident that the carriers will use the spectrum in order to deploy 5G services and applications. We want that investment and innovation to happen here, because spectrum availability is a big part of the equation.
Which companies are we talking about here? It's the Sprint Sprint's, the T-Mobiles, which companies do you think will be driving these auctions?
I would expect it would be some of the traditional players in the wireless sector, but we've been seeing a lot of interest from non-traditional players, from cable companies, from Silicon Valley companies and others who see the use case of 5G as being dramatically different from 4G. All kinds of industries, from agriculture to transportation to healthcare, will be transformed by these technologies.
The Internet of Things.
Exactly. And so I think as that Internet of Things starts to develop, a lot of companies are seeing an interest in 5G spectrum.
All right, so we talk about the shareholder perspective, but I still think there's a lot of confusion in the consumer place as to what exactly 5G is.
Yeah. So most consumers are familiar with 4G, of course.
And they know when their cell phone can't get a signal.
Exactly. And that's one of the reasons why we're very bullish about 5G, is because it promises 100 times faster speeds, much less latency, that is a lag time that it takes the network to respond to you, and much greater capacity. And so we're talking about applications like virtual reality and other types of things, some of which we can't even conceive today. But the consumer benefits are going to be massive. That's why we want America to lead, because we want American consumers to be the first beneficiaries.
See, Chairman, I find this really interesting because you're talking about public-private partnerships and investment from the outside community, but there's been some signals from Brad Parscale as well as Newt Gingrich, even the president himself, that the U.S. will become itself a telecom provider and that 5G needs to be wholesale rather than built by the private industry in a competitive market. What do you make of those signals?
I strongly believe that the market, not government, is best positioned to drive innovation and investment in wireless technologies. That is the lesson I draw from American leadership in 4G. We put the building blocks in place for the private sector to succeed, and as a result of that, we saw the entire mobile app economy and all of this investment and innovation happen in the United States. I think that's the right model for 5G as well.
And you're going to be with the president later this afternoon. Does he believe that?
Sorry?
Does he believe that too?
We'll find out, but I'm confident that he understands that American leadership in 5G is critical and that the market-based approach is the right one to promote investment and innovation on our shores.
That was FCC Chair Ajit Pai with Bloomberg's Kevin Cirilli. Now, it's one of just 3 unicorns in Africa. Now, e-commerce firm Jumia launched its IPO this week on the New York Stock Exchange. And the shares, they surged more than 70% on its first day of trading. Now, I caught up with the co-founders and co-CEOs, Sasha Poignoniec and Jeremy Hodara, and asked, well, why this international company based in Berlin, serving Africa with French founders, decided to list in New York.
Our business is a marketplace, and here in New York already a lot of marketplaces are listed and investors are very used to seeing those businesses, and for us it was a natural place where the investors understand the business of Jumia.
The investors understand the business. What about from building the brand perspective? Does it help being in New York in any way?
Our consumers are in Africa, our sellers are in Africa, our partners are there, and for them, having one of their daily brand, which is Jumia, that they use every day, being listed in New York as a first tech company is a big deal. And it's very important for all our ecosystem and all our partners that Jumia actually made it here in New York, and that's something that matters a lot.
I'm interested in the fact that you are growing quickly in terms of revenue, but still lacking in profit. How much is that a focus for you? How quickly can you become profitable? And it may eventually be an issue for the investor base.
We are growing fast and we have a very healthy business model, and I think this is why a lot of investors have trusted Jumia over the years and today with the public market, because they see the potential, they see the growth, they see the execution, they see the value that we create for both the sellers and consumers, and they understand that the business model is very healthy.
Have you got an aim as when you might become profitable?
We don't give any forecast, but we continue to always grow while becoming more profitable every day, and that's what we are building every day with our teams.
Paint the picture, Sasha, of the growth focus now of Jumia. Is it about new regions? Is it about focusing more on the payment side of the business? Where will this money that you've just raised go to?
So certainly, if you look at our markets, there are 700 million people in our 14 countries, and last year 4 million consumers transacted with Jumia. So we have a lot of consumers who are yet to discover the benefit of e-commerce in our market, and we're going to focus on that. And we're going to focus on continuing to build the business, create value for the users, so that when they come to Jumia, they see very good choice, very nice selection, and very good prices, and they will continue to adopt the e-commerce. And of course, payment is obviously for us a great avenue of growth, and we have launched Jumia Pay in a couple markets, and that is working very well. We're going to continue to put focus and resources on this very very exciting opportunity for us.
Jeremy, you're talking about why you've chosen New York is because the investor base knows marketplaces. That means they know your competitors. Who are your competitors? Is it Amazon? Is it Alibaba? Are there more local rivals? Where do you see the ecosystem going?
We are the only Pan-African player doing e-commerce in Africa. So we really are here, across our 14 countries to build it, and there is no one really competing with us, at the Pan-African level.
What would you say if Amazon came to want to buy you out? Would you be sold?
We'll see if that day happens. Certainly, we're focusing on building value for the consumers and the seller. That's what we do. Every day we work hard to bring value to the sellers and the consumers, provide a platform for the seller to do great business, reach new consumers, provide opportunities for the consumers to save time and save money. The rest, nobody can predict what will happen in this world, but we're certainly focused on just executing our business, creating value, and whatever happens will happen.
One of your first backers was Rocket Internet, well-known venture backing in Germany. One of the criticisms leveled at Rocket Internet again and again is that they steal other people's business models and they take them to new countries. Do you feel that you just took someone else's business model? How much do you think the risk was in going into a new region?
I mean, what we were doing was completely unique and new in Africa, which is to help people buy online, which is maybe something that we're used to in other regions of the world, but it was the very first time it was happening in Africa. So that was very new, and the way we have had to build it was also very particular and specific to Africa. There was no logistics, there was no payment. No one had ever done that before. So what matters is to build an e-commerce platform to connect the sellers and the consumers. And the way you do it, in every country is very subtle. There are very small differences everywhere, and that's what made it possible.
Talk to us about some of those intricacies. What are the biggest challenges that you've faced in Africa, and have you overcome it?
Africa, of course, presents some challenges. If you think about how do you work with the sellers, how do you do the logistics, how do you organize the delivery of the packages and the goods, how do you organize the payments? There are lots of areas of the business which you have to create a special African way to do it, and certainly logistics and payment is usually the one that people notice first, because we have about 50% of the business in the big cities and about 50% in the secondary cities and the rural areas, and we have created a very innovative logistic platform to make this happen, relying on hundreds of local partners, providing them the technology for them to operate their business across every city of Africa. So that is, for example, one of the biggest innovation we had to create to make this business possible.
So how would one get a delivery to a particularly rural area of Africa? Would you put a particular collection point? Paint the picture for our viewers.
So we have hundreds of logistics partners who work with our technology. And so what happens is that they know every region, every city, every neighborhood very well. So our mission is to help the sellers find the customers to buy products, and then we work with our partners all along the chain to get the products from the main warehouse down to the very last mile of the customers through the technology and the partners. And the way to do that is that consumers have two options. Either they will receive the product at their door, it's a door delivery, or we have a network of pickup stations that cover all our countries and that give to our consumers the ability, if they want to go and pick up their orders. And so every consumer has the two options, and what we do is we want every consumer to have the chance to get delivered wherever they live.
What about Jumia becoming more than just a marketplace? What about offering your own products? We see that within Amazon, Alibaba, for example.
First, the focus is to build a marketplace because we want to serve the sellers. We want the sellers to see Jumia as a platform for them to sell their products. Now, every now and then, we sometimes act as the seller whenever we feel that this is necessary, but we are primarily built as a marketplace. Our DNA is to build a service for the sellers to provide it to the consumers. We are really primarily a marketplace.
Some of my conversation with Jumia Technologies co-founders Sacha Poignonnet and Jeremy Hodara. Now, meanwhile, it's the biggest IPO in Europe this year. Payment service company Nexi raised $2.3 billion in its offering on the Italian stock exchange. That gives the company a valuation of $6.4 billion. Now, Nexi's investors include private equity firms Bain Capital and Advent International. Coming up, here's something for recently emboldened crypto enthusiasts to mull. Bitcoin is now at its most expensive level since just before the spectacular crash of the most widely owned digital currency. We're talking cryptos next. This is Bloomberg. So Facebook has nominated PayPal executive Peggy Alford to its board, and that's not the only change being made. Netflix CEO Reed Hastings and the former chief of staff to President Bill Clinton, that's Erskine Bowles, will both step down. Hastings and Bowles have been directors since 2011. The board election will be held at Facebook's annual shareholder meeting scheduled May 30th. Now, after hitting fresh highs in 2019, the technical signs of renewed pain ahead in the crypto world, they're piling up with an indicator that I look at now, the Bloomberg Galaxy Crypto Index, at its most overbought since hitting a record last year, when, of course, the crypto index plummeted 65%. So what next for the crypto space? Let's welcome an expert, Arianna Simpson, founder and managing director at Autonomous Partners, which is a digital asset investment fund backed by Cohen Private Ventures and Union Square Ventures. Arianna, welcome.
Thank you.
So, technical indicators. How much does the investor, be it retail, be it institutional, look at in technical indicators for things like cryptos?
You know, it really depends on your investment strategy. So are you more actively traded? Are you more of a venture type investor? In general, I find it kind of funny to see people using the same data and drawing wildly different conclusions on crypto Twitter in particular. So I think all of that needs to be taken with a grain of salt. In general, I think what's a more important indicator at this point in time is really the maturation of some of the projects that raised a lot of capital and are actually starting to launch with main nets.
Can you name some of the ones that you think are the most interesting bellwethers to be keeping an eye on?
Yeah, well, Blockstack, for example, is one. They're at this point live with over 80 applications on their network. Another one that recently launched is Cosmos, which is focused on interoperability. So there's a lot of great stuff happening.
So these are so-called dApps to a certain extent. Finally, we're getting a use case for blockchain technology. We're going to see these distributed applications come to fruition. Interestingly, you mentioned Blockstack, which I believe you serve as an independent board member, right?
Exactly.
This has actually drawn attention because they're starting to launch their own money-raising effort with an ICO or IEO? Which one are we meant to call it nowadays?
Neither, actually. So they are doing a Reg A+ offering. And so they are kind of the furthest along in that process. I know a number of other projects have done that as well. But they've been working closely with the SEC to make sure that, you know, hopefully their filing is approved, because they really want a broad base of support in terms of, you know, individual retail investors who can participate in the network.
So this is a token sale which will get SEC Regulation A+ framework approval. It'll basically be deemed a security, therefore, or not?
Yes, I believe so.
And what's interesting is that it's got rather interesting backers in terms of the people who are getting in on what is aimed to be, what, about 50 million fundraise. One of them, a rather well-known academic institution, Harvard. Mm-hmm. So how much should we look at endowments, pension funds, institutional investors starting to get into these sorts of spaces?
Yeah, you know, it's always a slow trickle to start, but I think these allocators are generally viewed as some of the most highly respected endowments and funds around. And so those typically will be kind of at the forefront of this movement. You know, a number of them invested in a few funds, Andreessen's fund, crypto fund last year, and I think this is just the beginning of that process.
Now, talk to us about what the SEC is up to, because, yeah, they haven't signed off on perhaps, everyone's waiting for when they'll be the first index fund, exchange traded fund, but cautiously they are trying to accept the temperature, the mood music coming from the investor base. They're trying to look for more expertise, right? When they're setting regulation, they're getting the crypto supporters basically voiced right now.
Yeah, there's definitely an active dialogue happening between a number of projects and the SEC's FinHub and other parts of kind of the organization, because I think they really do want input from the industry. In general, you know, they've been kind of slow to come out with guidance, but they've been working on that very actively. So I expect we'll see some more of that in 2019.
So, Arianna, if there's a retail investor set at home, but with a large chunk of change, someone who feels they understand the basic script and verse of what crypto is, how do you think that they do look between the wheat and the chaff? How do they understand which projects are making scale? Is it by those that are looking to become in some way SEC approved with their token sales? Or can they be a little bit more adventurous when it comes to the way in which they're raising money?
Well, definitely not investment advice for me, but I would say, you know, it really depends on what they're looking to do. For most people, holding something like Bitcoin is going to be the safest avenue. It is a highly specialized field, so I always caution people to, you know, move carefully, because at the end of the day, even for people who are spending all of their time, like myself, on this industry, it can be very difficult to kind of differentiate between what's quality and what's not.
What's needed next, do you think, to show the signs of maturity?
I think we're starting to see kind of maturation also on the exchange side. So, for example, that's been an area where we've seen things like socialized losses and constant hacks, things like that, that, you know, you would really not expect to see in an industry that's been around for as long as it has. And I think we're now starting to see a real differentiation between exchanges that are serious players and ones that are not. So, you know, I think that's a necessary step.
And what about, there's been much talk about, of course, Facebook launching its own digital currency, a token of some sort, a stable coin as it's known. We don't know the name of it or anything, but they're looking to raise money from outside investors, and Tim Draper talking about going in to speak to Facebook. How much does that help that you might be able to transfer money via WhatsApp, or is that just another competitor and noise to the situation?
No, I think that could be very useful. Obviously, Facebook already has massive scale, which would be a huge advantage to anyone who's hoping to enter the space. They seem to be really focused on, which I think is a good thing, moving in a real decentralized way rather than just making this kind of yet another payment option that is centralized in nature. So we'll see how that develops. They're still being pretty hush-hush about it for now.
Ariana, great to get your inside track. Of course, Ariana Simpson with Autonomous Partners. Still ahead, we talk strategy with China's Netflix-like streaming service IQE. CTO is going to be speaking to us next. This is Bloomberg. SoftBank Group has sold Japan's biggest ever local corporate bond. Now, the company tapped individual investors for $4.5 billion. CEO Masayoshi Son is turning SoftBank into a fully fledged investment conglomerate, and he's been cutting leverage. But that hasn't impressed ratings firms. They view SoftBank bonds as junk. Now, game on. Nintendo is making a push into virtual reality with the new Labo VR for the Switch console. Now, the kit will retail for about $80 and will be compatible with games such as Zelda and Super Mario. Now, our Asia tech reporter, that's Yuji Nakamura, tells us how it stands out from Sony, HTC or Facebook from Tokyo.
Hey guys, we're here in Tokyo's Yodobashi Camera. Nintendo's VR headset just came out. I have my hands on one of the first copies here. Nintendo's coming into the market a little bit late, about 3 years late actually. So their approach is, let's take VR and make it very, very affordable. This thing starts from about $40. And the way they've gone about it is that it's actually made out of cardboard mostly, the headset. For $40, it gets you the headset. You slide the Switch into it, and you can play their basic assortment of games. In 2 weeks' time, you'll be able to connect this headset to play Super Mario and Zelda. I think that'll be one of the biggest draws for fans. But overall, this is Nintendo's first comeback into VR in 24 years. It's a really affordable kind of way to get into it, and I think they want, mostly this is aimed at kids, families. It's kind of a friendly way to get them playing VR. They also have limited most VR experiences to about 2, 3, maybe 5 minutes most, so you don't sit there with a thing on your face for hours on end. It's kind of like a pick up and play and maybe give it to someone else kind of experience. But overall, starting at $40, it is the cheapest VR headset on the market, and this is their approach into VR, coming in a bit late, but we'll see how it does. This is Yuji Nakamura from Bloomberg News in Tokyo.
That's the inside track. Now, let's talk China, because the popular Netflix-style streaming service iQIYI wants to utilize AI to compete with rivals such as Tencent or BitDance. CTO Baidu-owned iQIYI spoke to Bloomberg.
As a Chinese, the content business, the content market is highly competitive, and we have been invested a lot to have a better content, which really attract our users, our viewers. So AI technology, AI and big data technology are actually very important for us to help to improve the efficiency when we create content and when we improve the efficiency of the post-production. And also we utilize AI to push vast amount of content to the right users. And it can also help our advertisers to target the right audience so that it can improve the better impressions for them.
And one thing, of course, all of the hype these days seems to be around the launch of 5G services around the world.
Yes.
How is that going to affect your business?
Yes, because 5G will introduce a larger bandwidth and less latency, and it can help us to stream better content. We just have a collaboration with China Unicom 5G in Beijing that we can stream in 8K VR content to the VR devices, which have a better experience than now. So we see that in the future. We think the content business will be changed and evolved after the 5G arrival.
We have seen, as the U.S.-China trade tensions escalate, some distrust about Chinese tech companies. Are you at all concerned that that might affect you as well?
Actually, no. It doesn't affect because we are a technical-driven entertainment company, and we focus on the content and focus on the user experience. So we don't think that the trade between U.S. and China affect our business. And we doesn't have, actually in the States, that's a lot of Chinese people watch the IG contents through the internet, and it's not affected at all.
What about the fact that the Chinese economy has started to slow down? Do you expect that to have any impact on iQIYI's business, or how can technology and innovation still keep bringing those users and consumers to your service as opposed to your competitors?
Actually, we are encouraged by the membership revenue increasing very big last year. We do not see that have any effect about the economic. For example, that we have more than 72% of membership revenue in last year, and we are seeing that every day we have averaged more than 100,000 new members, subscribers, paid subscribers every day in last year. So we are seeing that it's still growing very fast.
The CTO of iQIYI there. Now that does it for this edition of Bloomberg Technology. And remember, we're live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network at TikTok on Twitter. Have a great weekend. This is Bloomberg.